Yeah. Good morning, everybody. This is the Live Market Open for Wednesday, March 2nd. I'm Yohay Elam, Forex Crunch and Market Movers podcast, doing the show as usual for FX Street. We have a good market mood today. We'll talk about that, other recent developments, various charts and levels the next 24 hours, and of course, your questions. If you cannot see the chat box, please go to the address here on the screen, tlk.io/fxstreet-forex-live-video. Okay, we'll start with the mood. It's a good mood. It's a good happy Wednesday, if you wish. We had a few positive figures. First and foremost, the ISM manufacturing PMI. Let's jump over there. It came out better than expected, still negative, still showing some kind of contraction, but better than expected, very close to balanced at 49.5 points, including an improvement in the employment component. Okay, so that's basically the good news. Other stuff. Of course, this raises the chances for a rate hike this year, but so far it's still far away, only in November, so it's not a threat on stock markets. We had Asian stock markets rising. One negative thing that could have happened was the jump in API oil inventories, but this was ignored. Last week we've seen that there was no correlation between API and the real crude or the EIA's crude oil inventories. We had, of course, political news from the United States of America. Super Tuesday saw victories for Trump and Clinton, and a big defeat for Rubio, which in general should be bad news because Rubio is sort of seen as the mainstream candidate, and Trump is getting closer to the nomination, which is trouble for the Republican Party and for the American people. We want to see, markets at least want to see more mainstream candidates like Clinton and like Rubio. Anyway, but this was so far ignored by markets. No sound. Okay, there is sound. Okay, good. So that was the political news. Let's talk about data. Yesterday morning, we had Eurozone manufacturing PMIs coming out more or less as expected. German unemployment was good. It dropped once again. That's also good news. No surprises. Eurozone unemployment beat with 10.3%. We did have a miss in UK manufacturing PMI. It came out at 50.8 points. Not so good, but also not a disaster. I mean, we knew that manufacturing is doing not so well. Canadian GDP came out better than expected, 0.8 quarter over quarter. Good news for Canada. We had a breakdown of the support line. We'll talk about that soon. We'll cover all the charts. New Zealand milk prices rose 1.4. Good news over there. What I mentioned before, the ISM manufacturing PMI in the US came out better than expected, and overnight, yet another positive figure. Australian GDP beat with 0.6 against 0.4. We've seen a nice rally in the Aussie dollar. Okay, so I talked about all the good news. Well, not all is perfect, but you get the general picture. Now let's look at the charts. Okay, for euro dollar, well, currently it's rising just a bit, but it remains depressed. Expectations for the ECB, the tension is mounting. 8 days to go until Draghi says his word. As I mentioned, on Monday we had bad inflation figures in the Eurozone. It fell back to deflation minus 0.2, and even also the core inflation figure was weaker than expected, 0.7. Okay. So that's what triggered the fall in the euro beforehand, but now it's finding some stability. We still don't know. I think we talked about that as well. If markets are once again expecting too much, like in December, and we'll get disappointment. I mean, markets expecting too much because of Draghi, or we'll see what happened in January 2015, where expectations were high, but Draghi even exceeded them. I believe he'll manage to keep the euro depressed, but, well, we'll know in 8 days' time. Let's continue with pound dollar. Here we had some kind of recovery. Better mood in markets does help the pound. Let's talk about the Brexit. And the market's attention span is, of course, moving away quite easily. Anyway, we're still under 140. Not going anywhere fast. We have an interesting figure today from the UK as well. The weak manufacturing PMI yesterday kept the pound depressed. Dollar yen, here it's the best example of a positive market mood. No need for the safe haven yen. A big sell-off, rise in stock markets, including in Tokyo, the Nikkei, 114.30 at the moment, 115.20. No, let's adjust this. I would say 115 is some kind of resistance. Support at 113.30. Dollar yen anyway is on the rise. The Canadian dollar, here we finally had a big breakout. Positive GDP, okay oil prices, currently a bit rising, 134.50, but in general we've touched the 134 level, and most importantly we broke under 134.60. Let's see if this break holds. But if we just, even in the 4-hour chart, no, yeah, here we can see this double top at 134.60, and yesterday finally we broke under it. Remember, this double top was formed in September and December, so in dollar CAD we're in the lowest levels for the year. Stronger Canadian dollar on top of okay oil prices beginning to fade away just a bit, and also, and most importantly, GDP. Okay, Aussie dollar, we had positive GDP with an upwards correction, once again struggling with the 72.20 line, but we had a big rally. We reached already 72.50. Let's see if this continues. Well, as I'm talking about positive mood in market, stronger commodity currencies, but now we're seeing a small correction, small reversal. Kiwi dollar, yesterday the positive milk prices helped it bounce from support at 65.50. Reached a high of 66.60. Currently it remains above 66. The range is 65.50 to 67. Other currency pairs, dollar Swiss just under parity, between 99 and parity. This is the current range. This morning we had GDP also from Switzerland, which came out a bit better than expected, but nothing crazy. Euro Swiss, relatively low ground, 108.50. Let's see if we're getting close to that former line in the sand for the Bank of Swiss National Bank, 107.60. No, still a safe distance from there, but anyway, I would not be surprised to see some kind of an intervention at these low levels, because we've already been at much higher levels, reached 112. 110 was a line that seemed to be defended by the Swiss National Bank. Anyway, let's see if we have any kind of intervention. Euro pound, okay, the trend continued, support at 77.40, currently at 77.80. We had another fall, so he went sort of fell off came off the boil. Euro pound, especially because of the weakness of the euro and some stability in the pound, we fell under support here at 78.50. Next support line is 77.40. Okay, we have a veteran line. I think it's still relevant. Euro yen, the weakness of the yen, lack of demand for safe haven. It's at 124.30. It fell to even lower ground earlier this week, but now anyway, resistance at 125, support at 123. Let's see if the trend higher continues or if there's fresh demand for the yen. Pound yen, very close to resistance here due to the weakness of the yen at 160, the round number. We had a break above 158.50, and we found support beforehand at 156.10. Further resistance, if we have a break to the upside, is only at 163.80. Okay, so still a relatively positive mood, supporting the pound and mostly weakening the yen. Oil prices, we had a challenge of the highs just under $35. Now we're coming off the boil under 34. So this is happening this morning, but in general, oil prices are towards the higher end of the range. We were very close to $35, which was the highest. Yeah, above 35 is a level last seen only really at the beginning of the year. So if you look at the lows of $26 in WTI crude oil, we're that would be around 15% above these lows, even more. No, the calculations are wrong. It's much higher than that. Yeah. Anyway, it's what, 30%. Anyway, let's see if you have some comments before we move to other things on the agenda. Fabian says, good enough data from the Eurozone and overextended selling would suggest euro retracing, but risk-on scenario would hint for some euro dollar doing. Your call, I think we'll have a period of nervousness on euro dollar. Today we have the focus shifts to the United States of America, but we also have a speech from Benoit Coeur. I hope I'm not mispronouncing his name. I'm sure I am, but I'm not butchering the name too much. Anyway, I think the pressure on euro dollar could sustain. Data has been okay. The fall in euro dollar has been very gradual. Yes, we're already 500, even more than 500 pips off the top, but we did have periods of consolidation. I see more pressure to the downside. I see support at 107.70 and then followed by 107.10. I'm not sure we'll get all the way to 107.10, but the pressure still continues. If we have an okay figure from the United States today, the ADP NFP, it could be okay. So I don't see the move as overextended. Another comment here. Can't see Clinton, but I also can't see Trump, so I'm confused what they want in the USA. Arnie should have run, but according to Constitution, you need to be born in the USA. President was born in Austria. Bad luck. For another TV personality. Yeah, lots of colorful figures over there in the United States elections, and I think it's still quite a serious job being the President of the United States of America. The role of the president, I mean, it's not, there are checks and balances in the United States, Congress, so it's not all that simple. I mean, the figurehead is, of course, important. It's the commander-in-chief. But remember, in the past few years, there was a lot of deadlock in Washington. A lot of movements began in the state level, in the Supreme Court. So, of course, the figure of the president is important, but it's not the only thing. More USD down. No, okay, that's the previous comment. Anyway, currently euro dollar rising just a bit. Dollar yen also coming off the boil perhaps, but in general the mood remains positive, but in the last few minutes we are seeing some kind of a correction. Okay, we talked about all these figures, most of them really positive, supporting especially commodity currencies. Now let's talk about what we have this morning. First of all, the Spanish unemployment change. This data is actually already out, so a bit negative, worse than expected. A rise in unemployment, 2,000 instead of 0.2. Well, that's not so dramatic. Should not have any impact on the euro. Okay. What's more interesting in Spain is that yesterday we had the beginning of an attempt to form a new government. Sorry, an attempt to, you see me on the camera. Anyway, an attempt to start a new government in Spain. Here, the candidate from the Socialist Party, Pedro Sanchez, he spoke in Parliament. He made his initial speech. To me, I saw part of it. It seemed like an election speech. There is a good chance that we'll have fresh elections here in mid-June, just after the referendum in the UK. Currently, has only support from the center-right New Ciudadanos party, which is far from enough. And he doesn't have the support neither of the current ruling party, Partido Popular, PP, nor left-wing allies, potential allies, Podemos. The debate in Parliament continues today. There's supposed to be a vote. In the first vote, he's expected to receive, he needs to receive an absolute majority. He'll fail that for sure. And then there's a second vote scheduled for Friday. And there, you just need a simple majority. And let's see if we have negotiations until the last moment to perhaps get support of Podemos, and then we'll have a new government here in Spain. Or we'll have new elections. So that's more interesting for Spain. Of course, uncertainty is what markets don't like. You also have uncertainty in Ireland following the hung parliament results over there. Okay, but let's get back to further events we have on the agenda this morning. Here, well, significant event for the UK. Construction PMI, the second out of 3 PMIs, expected to come out at 55 points. Just like last time, the construction sector has been the stronger link in the UK recovery, better than manufacturing, that's for sure. In any case, the services sector PMI remains the most important one because that's the biggest sector, naturally, and that comes out tomorrow. Okay, so remember with UK figures, we often have these runs towards the event and then markets front running because of a leak or because of expectations for one result or another, and it doesn't always meet reality. So we could see the pound rallying before the event, then a good figure comes out, and then we have a sell-off of the pound because that's already priced in, and it can happen the other way around. Okay, something that doesn't appear here on the calendar, that I picked up from, I think it was Bloomberg. Anyway, we have a speech by ECB member Benoit Cœur. He is French. He'll be speaking at 8:30 GMT. That's in around 10-15 minutes. In the past, he had some influence on the euro. Let's see if he gives us a hint about the ECB meeting. We're getting close to this quiet period before the ECB meeting that members stop talking. That doesn't mean we won't have leaks, reports, what have yous, but he's giving an official speech at 8:30. I'll try to pick up headlines on that and see how it moves markets. Okay, we talked about the UK construction PMI, and I think the main event for the day, because it comes from the United States, is the ADP non-farm payrolls. So yesterday's first hint for the non-farm payrolls, the manufacturing PMI, came out better than expected. Let's jump to that. We do have producer prices in Europe. I don't think it's that important as the calendar shows here. It's expected to be negative, but we already know that consumer prices, which are more important, they're the mandate of the ECB, came out negative. Anyway, 10 GMT, 11 here in Europe, we have producer prices expected to fall month over month and minus 2.9 year over year. Sorry, let's skip to the ADP. We're expecting here a gain of 190,000 jobs, less than 205,000 seen last month. The fresh figures are for February. We always have revisions. This report by America's largest payroll company, of course, relates only to the private sector, not the public sector, but most jobs are created in the private sector. Anyway, any deviation, a rise of 200,000 will be positive for the US dollar, indicating better than expected non-farm payrolls report, and a disappointment, I would say 170,000 or less would be bad for the US dollar. Remember, the correlation is certainly not one-to-one. Things vary over there, but it's still significant. Okay. What else do we have on the agenda? Okay, this is more important than yesterday's API. The Energy Information Administration, this official government report on crude oil inventories, expected to show more of the same. Another gain in crude oil of 3.5 million. Also watch out for distillates. This is important because it has an impact on the wider markets. More oil means lower oil prices, means a more negative mood in markets, okay? And weaker commodity currencies, first and foremost the Canadian dollar. And also the other ones are affected. And if we have a drawdown in oil or a rise which is less than expected in this case, it's of course positive for markets, even though it's more less supply of oil, higher prices, higher demand perhaps, and it's good news. Let's see how this turns out. I still think that the ADP figure is more important. Okay, we have the Fed's beige book at 7 GMT. This is sort of a wide report on the economy. We will probably hear that some districts are seeing moderate growth, and some are seeing modest growth. In the past few years, it has less and less impact. I'm mentioning it because it appears in this calendar as well as other calendars, but I don't think it's that important. Anyway, big event for today, ADP non-farm payrolls Also watch out for the other events we mentioned. Australian trade balance comes out at midnight GMT. I think more importantly overnight is the figure from China. The independent measure of the services sector, the Caixin PMI, expected, well, we don't have expectations here, but in general, if we want to see China moving out of the manufacturing and investment model towards services and consumption, this is a figure that needs to be rising. Okay, it's already in positive ground, around above 50 points, meaning that we are seeing growth, but at 52.4, this is relatively modest, poor growth, and with manufacturing in contraction territory at 48 points, according to the same institute. Wonder how that's pronounced. Caixin or Caixin. Anyway, we would need a more positive figure here to be encouraging for the Australian dollar and the global economy in general. Okay, I think we covered all the events for this morning. Another thing I want to show you is expectations for rate hike. So of course in March 16th, that's 2 weeks, exactly 2 weeks from now, we have a Fed decision with fresh forecast and a press conference by Janet Yellen. Only around 5% chance for rate hike. But we are seeing an improvement in the sense that the next rate hike is expected to be in November. Just a week or two ago, it was somewhere late in 2017. So the better reports about the US economy are certainly encouraging for also for rate hike expectations. I would say that perhaps but yeah, one rate hike in November and the next one only deep in 2017. Not a big shift, but still slightly higher expectations for a rate hike. Okay. Any questions? Euro dollar is moving a bit higher this morning. We have reached the lows of, well, I would say 108.50, which I mentioned is not so strong, and perhaps 108.35 is some kind of support, but I still see 107.70 and 107.10 as much more significant lines. Okay. Let's see if this continues. We have the speech by Kor, or whatever his name, however his name is pronounced, at 8:30 GMT. Any questions, any comments about the primaries in the United States? These are, of course, the Super Tuesday ones. 11 states or so voted. We have many more coming up. We should have a better picture of the nomination by March 15th, although it seems clearer that Trump and Clinton are the frontrunners, but it still is far from over for both parties. Why is the euro rising against the pound at the moment? Well, we're seeing euro dollar rising just a bit, bouncing off the lows. We can perhaps attribute it to some kind of safe haven flows, but I'm not sure. I think it's just a bounce for the euro. Regarding the pound, we have the construction PMI coming later. I think some kind of correction also here pushes the pound lower. So I would say, looking at these charts, it's more story of the pound at the moment. But there wasn't any significant story. Euro pound bouncing. I think it's more of a correction as sort of morning move traders came back to their desks in Europe. I cannot see any kind of event or news headline or anything that I could point. Yeah, the Spanish figure is not that important. I mean, it's not that market moving, of course. Still see pound reversing, more weakness. Yeah, uncertainty about the referendum. From now until June 23rd, the date of the referendum, it's going to weigh on the pound. Economic figures do matter. They're not totally on the back burner, perhaps like last week when everybody was talking about Boris Johnson. But so we will have some impact from the construction PMI, and more importantly from the services PMI, but it's also the weakness. I agree that the weakness from the pound from the referendum is here to stay. Stop hunting, yeah, it could be some kind of stop hunting. These moves aren't that significant anyway. It's not a big breakout. It's just a small correction as far as I see. So in the past half an hour or so, pound dollar is sliding, but well within the range, basically erasing the previous gains. Not something huge. The same goes for euro pound. Yeah, every bounce to be sold, perhaps. Yeah, the pound remains depressed mostly because of the referendum. Euro, yeah, all bouncing very moderately within the low range. Okay. We should soon have this speech. I wonder if we can get any kind of headlines. I doubt that, but anyway, more questions. Perhaps we'll talk about other events we have this week. We'll do a recap. So on Monday, we had the preliminary inflation figures in the Eurozone. They were bad. They came out, they showed that Europe is back to deflation. A drop of 0.2 in prices, that hurts the euro. Okay, another comment here, euro pound. Seems London boys have arrived at their desk and playing the double bottom. On the hourly chart, be careful on selling that at support. Yeah, perhaps I wouldn't rule that out. London boys did arrive at their desks. We had the open. I mean, that's why we do the open at the same time. 8 GMT, 9 in the old continent. Yeah, double bottom on the hourly chart. Let's look at the hourly chart. On euro pound, okay. Yeah, you can see this line here at 77.60. I guess that's what you're referring to. Setting up for payrolls. Yeah, maybe this is really more of an important line. I still put 77.40 because it was a line of historic importance, but it's becoming less relevant. Speaking of the non-farm payrolls, alongside this double bottom talk, that's the big event, of course, of the week. It comes on Friday, and we have an ongoing build-up with the ISM manufacturing PMI coming yesterday better than expected. Today, we have the ADP non-farm payrolls as a hint. Tomorrow, we have the ISM non-manufacturing PMI, a report for the services sector. Expectations, but it can be also quite positive. We have a live coverage on FX Street together, and I'll be there with Adam Button of Forex Live, and Dale Pinkert and Valeria Bednarek. So it should be fun, beginning on Friday at 1 GMT. Possibly, but doesn't look easy to trade now. Yeah, it's a bit messy. Just a small correction within the range on both euro pound, well, all euro pound that we're looking at right now. Euro dollar and pound dollar, sort of correction of the previous moves. Nothing I would say to be too excited about. Yeah. Any more questions? Yeah. There's nice comment here. There's playing of a cluster of monthly central pivot and daily S1 is support. Okay, if you could share a chart regarding that, put the link in the chat. I'll share it with everybody. That'll certainly be interesting. Okay, Jax comes with his regular question. The pairs to watch today. I would look at euro dollar because of the tension towards the ECB. Let's see if the speech really is a market mover or it's just a fake. Also, well, focus for me is on the US dollar today. but against which currency? So perhaps the Canadian dollar. I know I talk a lot about the Canadian dollar, more than many traders want to hear about that, but this is a big breakout here. If you look at all the major charts we talked about, perhaps there are other charts, more crosses, there are endless currency pairs. We really had a big breakout here. Okay, we've fallen back to levels last seen in 2015, not that far ago, but it's around 3 months. And we're currently struggling. Let's see if this breakout really holds. If we fall to further support here at 132.50 more or less, 132.20, or we'll have it move back up. It depends a lot on the market mood and depends on crude oil inventories. So for me, dollar CAD is still fully in play mode. Okay, so dollar CAD, I would say, and of course euro dollar, which is not only the world's most popular currency pair, but also worth watching in general. Yeah, euro dollar trading sideways and kind of flat. I'm not sure this flat trading will continue. As we've seen, in recent, it's been grinding lower. Okay, we don't have very dramatic bounces, but we are seeing a clear trend. Currently, today we have some kind of a bounce, but in general, in the past 2 weeks or so, most of the days have been negative. Some have seen sharper drops, some weaker drops, but I'm not sure we'll stay flat for a very, very long time because of all these expectations for the ECB. And also, if not the ECB, we have the ADP non-farm payrolls. So we did have relatively more action than we had beforehand in the past. I would say, well, in February in general, we had this big rise in euro dollar and then the gradual fall. Much more interesting than the weeks that preceded it, which were quite frustrating. So I would say it's good news in general. Okay. More questions? Yeah, you can always, of course, take the day off. A missed opportunity is not a missed one. There are always more opportunities in markets. Okay. Yeah, at the moment we're seeing a small bounce. Yeah, at the moment it's not very exciting, but I believe that will have more excitement later on. We did have excitement in the Australian dollar earlier in the day. Well, deep at night, I would say that we had a rise to 72.50 was the high. Okay. Let's mention a few more events, and of course, all more questions are welcome. Still waiting for those headlines. So other events worth mentioning, what markets sort of ignored is the Chinese PMIs, which were weak, but on the other hand, China cut the reserve requirement ratio, and that's, of course, more stimulus, and that's good news for the world. Swiss GDP, yes, it did come out. It came out better than expected. I think I mentioned it sort of half-heartedly because we know that these figures don't have a big impact. So yeah, GDP came out at 0.4, double the expectations of 0.2. Not so important for Switzerland, which moves on other stuff. That's a quarterly figure. That's for the fourth quarter. Year over year, growth remains quite poor in Switzerland. Well, better than expected at 0.4, but and the consensus was 0.1, but weaker than 0.8. And in general, a yearly growth rate of 0.4 is really unexciting at all. Remember, Swiss franc moves a lot on intervention by the Swiss National Bank. Okay, more questions? Let's see. I'm trying to get you news regarding. Okay, pound. You're such a Swiss hater. It's a nice country. I've been there last summer, but it's the Swiss franc is not really a good pair to trade. Yeah, question here about dollar yen. Dollar yen is riding on the risk on sentiment. Okay, 114.33, very close to the highs so far. Resistance at 115, support at 113.20. If the mood worsens, we'll have the pair falling, but perhaps it has bottomed out. Look at this double bottom here at 111. Okay. I think if we have a better than expected figure in the United States from the ADP, we'll have it move to the upside. So it depends a lot on the market mood. If we have a fall in crude oil inventories, it could also boost dollar yen. If we have the other things, more oil running around, weakness in the US, we could have it fall. That's my opinion on dollar yen. Pound yen. First and foremost, at 9:30, we have the UK construction PMI. Okay. And the referendum weighs on the pound. I see more chances of the yen losing out to the dollar than to the pound. The pound is showing a lot of weakness. Anyway, 160, 163.80, and to the downside 158.50 and 156.10. What's your bias on pound in this month and the next? I think on the yen. I think the yen will weaken. I think it has reached some kind of a bottom, but perhaps not go too far. Still, I still see a risk on sentiment. Okay, I agree. UK data is not a market mover. It usually is, and we shouldn't totally ignore it. But with all this referendum talk, it's overwhelming for the pound. It overshadows the economic figures. Interesting article here. Yeah, no, I didn't throw eggs at the S&B. While I was there, I was only at a small corner in the Alps near Mont Blanc, and I ate lots of cheese, but I didn't throw any eggs at them. Yeah, based on Japanese fundamentals and monetary policy, I think the yen has room for weakness, and but perhaps not too far. We will need more positive figures from the US, more action perhaps from the ECB, some kind of stability in oil in order to see the yen falling. Okay, thanks for the article. I can't read it. Anyway, it's gated. Anyway, thanks for the comments. Okay, we have some headlines from Mr. Benoit Cour. Perhaps it's pushing the euro down in the last few minutes because the comments are negative. He says that the Eurozone urgently needs higher growth, and that the ECB is well aware of the negative rate impact on bank profits. Okay, so he's sort of doing some lip service to banks, but I think he does sound the alarm. That means his comments are dovish. That means that I would say that it's a bit negative for the euro. Again, some kind of action from the ECB is expected, or a lot of action, but we don't know. We don't have any details. Don't know. The expectations haven't been fully shaped, but his words are leaning to the dovish side. I believe they are pushing euro dollar a bit lower. Higher growth needed to bring down unemployment. Yeah, and like Draghi in the past, he says, okay, we'll do our part, but also governments need to do their share. Draghi almost joined the anti-austerity camp, if you ask me, in his last speech, sort of telling governments that have fiscal space to do more, and that's a hint towards Germany. Okay. Anyway, if you really want to read the full text of what he said, it's on the website of the ECB. I'll paste it right now in the chat box. Okay. So if anybody's really interested, but in general, I would summarize the speech as dovish. So I'm just putting it right now. Here we go. Anyway, we're seeing some kind of slide in euro dollar, perhaps because of that, because of the dovish tone. Okay. Yeah. Yeah, he also says that the global economy, Brexit are sources of uncertainty, that negative rates complement the ECB's bond buying program. Remember, if the ECB now cuts rates further into negative ground, it gives them more space to buy bonds, because they buy bonds until the limit, the yield limit of the negative deposit rate, currently minus 30 basis points. If they lower it to 40 or 50 basis points in the negative, they can buy even more bonds. That means especially German safe haven bonds, which are so expensive, and many of them are already negative rates, that that some of them are not eligible for buying by the ECB. But once the negative rates fall, we have more bonds eligible. Okay, the wrap up. This is the wrap up for the live market open for March 2nd. It's Wednesday, the day after Super Tuesday. Super Tuesday had little effect on markets. Markets are generally happy. Good data helps markets, lifts chances of a rate hike this year, despite, well, not all the data parts have been positive. Eurozone PMIs have been okay. German unemployment continues falling. Good news. Eurozone unemployment beats. It fell to 10.3. We had a miss on UK manufacturing PMI, a bit of pressure on the pound anyway because of the referendum. Good news, especially for commodity currencies. Better than expected Canadian GDP pushed dollar CAD below critical support. Milk prices rise in New Zealand. Most important event yesterday is the ISM manufacturing PMI came out better than expected. Finally, some good news for the US manufacturing sector. And also the land down under. Australian GDP beat significantly, 0.6 instead of 0.4, with an upwards revision as well. Okay, today on the agenda we have, well, Spanish unemployment didn't have an impact. We had the ECB, remember, providing some dovishness, talking about the urgent need for growth. And we have UK construction PMI expected to be still positive, still showing nice growth. Impact will be minimal because of the referendum fears. US ADP non-farm payrolls, the main event for today, 190,000 jobs are expected. This is, of course, a big hint towards Friday's all-important non-farm payrolls. Crude oil inventories, important not only for the Canadian dollar at 3:30 GMT, but also for the general mood in markets. And overnight, we have trade balance in Australia, and more importantly, Chinese services PMI. So we talked about positive market mood. Let's see how this is reflected on currency charts, right? So euro dollar is a bit lower, found some support at 108.35, resistance far above at 109.60, support 107.70, 107.10, tension rising towards the ECB. Pound dollar off the highs, finding it hard to really move above 140, lots of weakness in the pound. Support 138.80 and 138.40. Let's see how it reacts to the data. Dollar yen is higher. Oh, it's even extending its gains. 114.42, resistance at 115, support at 113.20 and 111 line in the sand. Okay, better market mood means less demand for the safe haven yen, and dollar yen is rising. Dollar CAD, I talked about it breaking critical support at 134.60. This line now turns into resistance. exactly 134.61. It was a double top in the autumn of 2015. We fell already to just above 134. Let's see if we have further falls from here. Okay, a lot depends on oil, which is back under 34, but still remains on high ground. Okay, Aussie dollar still enjoying the positive GDP figure. Not crazy, but good enough. 72.20, support at 71.40, which is becoming weaker. 70.40, resistance at 72.80. Kiwi dollar, well, in the lower part of the wide range, 65.50 to 67. I guess, and that's it. So, all in all, the market mood remains positive. The dirty US politics didn't have an impact so far. We had stock markets rising, higher oil prices, higher commodity currencies, and a higher and weaker Japanese yen. The euro is under pressure because of the ECB meeting. Yeah. Okay, so that's it for today. Thank you very much, everybody, for coming. I wish everybody a safe and successful trading day. Should be an interesting day today with all the figures coming out, all the tension. And we'll be here tomorrow, as usual, at 8 GMT for another day in the markets. So that's it for today. Thank you, and bye-bye.